Good morning, everyone. It's 8:02 a.m. Chicago time. Good afternoon to you if you're on the a different part of the planet. Thanks for joining me. It is Monday, the 4th of December, 2017. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The market has popped up on the open, on the reopen, specifically the ES, the S&P futures had a gap up from Friday. Friday's close was 2644.50. The open overnight is 2654.50. So we have a 10-point buck or a 10-point gap up on the reopen, and the market has held those prices. Several reasons for that potentially. Nobody really knows. But some of the ABC News uh, uh, news that came out, the announcement that came out about Michael Flynn, General Michael Flynn, who was one of Trump's advisors. It is true that he pleaded guilty to lying to the FBI and also cooperating in the investigation. But items that were some of the details that were announced could not be corroborated, and so they were refuted by ABC, and the reporter was suspended for a month. So that's part of the news. Is um, the additional news is the tax cut bill went through, and it's on its way to the it's going to be on its way to the president to be turned into law here probably this week. So we'll see how that works out. Overall, the Michael Flynn news was almost all was true, and it is a threat, but it causes instability. Remember, the market does not respond well to uncertainty. The market tends to move to safety on uncertainty. So every time there's uncertainty, uh, every time there's uncertainty uh, in the markets, you'll see a spike in gold, treasuries, and so on, and a move away from risky assets like equities and so on. So that's what we saw. So we have a gap up this morning, and we are trading higher. This was expected for Friday. I'll go over what we looked for on Friday, but this morning the DAX is ripping up 220 points up. The DAX is up 1.72%, 1.72%, and it's very, very strong. Followed by the Euro stocks, which is up 1.53%. The Russell's up almost 1%. The Dow's up 0.9%. The laggard today is RBOB down 1.39%, and crude oil down 1%, 1.08%, trading down 63 cents on the January contract. The treasuries are down 7.5 ticks. But overall, or the 10-year note, I should say, is down 7.5 ticks. Overall, the market is still euphoric and is allocating to risk this morning. So that's where we stand. As far as what we looked at for Friday, here's what the plan was for the primary scenario on Friday before it was interrupted by the news. The drop of 45 points. I got to tell you, it just pleases me to see that. I'm not a perma bear, and it's not like I'm looking for the markets to drop in order to make money. I don't trade that way, but to see it flush like that is refreshing. It would be nice if it did it over a period of several days as opposed to another V-bottom flush on news, whether it's the first missile launch from North Korea, the second missile launch from North Korea, something to do with Trump or whatever. These are all kind of political news, geopolitical issues that are being addressed by the market, but the market comes back and forth. And it makes sense And it makes sense because with the market's been anticipating, this bull run that's happened since the election last year. The market's been anticipating lower taxes. I mean, just a ton of money, lobbying money that has gone into a tax bill that cuts taxes for corporations in the upper tier. And we all know that. And that means you cut taxes on corporations, and the response is going to initially be lower cost, right? So earnings go up. Companies tend to take advantage of that by buying back stock. And so if earnings go up, that's what drives price technically for indices. And so you would expect the market to continue higher. So the market's still anticipating a higher high through 2018. The market's anticipating higher earnings, better performance on stocks through 2018. And so we're likely to continue to see this continuing on for a while. I'm not an economist, I'm not an analyst, but it just makes simple sense that this would be the case. In any case, the expectation on Friday was that the market would likely open and trade within value sideways, potentially test lower a little bit, but overall we're looking for an impulse up into value high, which is 26.54 at the time, and then we're looking for the tax bill news. And then from there, if the bill passes, then we're likely to see it sweep up. If it does not, we're likely to see it go sideways and move sideways and then slightly come off slightly, but overall that just means that they have to go back and redo the bill and vote again, which doesn't give us much of an opportunity to catch a better price to buy, because eventually with the way the government's set up, we're likely to pass a tax bill anyway. So that's why I stopped it right here. I stopped it with the news, but overall the expectation is for higher. And then this was interrupted. This is what we did. We actually got close to that 26.54 right here. We went to 26.50.75. The SOC on the news. So the expectation is 26.50.75. Let me show this on the Renko. This Renko, it was a very busy day, so the Renko is very tight. So 26.50, the expectation is it pulls back down, consolidates, and then continues to drive higher, consolidate, continues to drive higher, consolidate into the upper value, pull back, consolidate against the IB, and then push higher. Excuse me. On the tax news, that it didn't have an opportunity to do that. The SOC for the tax news is 26.49 quarter. SOC stands for the scene of the crime. This is the point at which the price at which the normal auction is being interrupted by external factors such as news or an economic release or something like that, where price discovery is interrupted. And then generally what it does is if the news is not lasting, then the market resumes from that point and continues to trade normal. And so the primary hypothesis is fairly correct in that we anticipated the push higher. We looked for 26.54, got interrupted, and we just the rest of the day was just shot. For me, it's not for everybody to trade such a thin market, especially if you're in a NASDAQ or the Russell or something. There are 1 lots and 2 lots and gaps and very tough to trade, but that's my favorite. I just switched to scalping, and it's my favorite way to scalp. I love seeing those markets, whether it's news-driven markets or frantic markets. It's almost like a video game to me once that happens. Not that I should say that, but this is a secondary hypothesis that we push up, or the secondary scenario we push up, fail to continue higher above the closing swing high, and then we have an impulse down and it starts to move down into this lower high volume node, finds a base, and then starts to rally back up again on news. And so That didn't work out at all. It kind of did. The top I put in here, oops, this high here was pretty much dead on to where we stopped. But again, I'm not going to say that that was anticipated because the interruption here was news, not the normal auction. This isn't what was intended. As far as what we've done in the overnight session, here's what we've done. We've gapped up, pushed. The entire night's range occurred in the first 15 minutes. This first bar here controls the entire range from 54 to 63 and a quarter. So what we've done is we've gapped up 10 points, and then we've had about 10 points of range. We're 3 ticks short of 10 points of range. So from yesterday's Friday's close to the high, we have almost 20 points. The probability of the market filling that gap at 26.44.50 is very, very low. It's in the single digits. The anticipated action this morning, and look at how balanced this is. The market's just had its pop, and it's just anticipating and waiting for news. It's waiting for something to feed it. This looks like it's something out of a textbook for a normal distribution histogram. The volume overnight is very good. It's very strong up here. Let's see what the volume is. I can't read it on that chart. The volume is, ladies and gentlemen, it's 272,000 contracts. That's about twice the norm. And so it's meaningful that this is going sideways, and it's being supported by the global markets. There's a lot going on across the board that is that supports this push up, and so this is where we stand. Again, there's news out of Europe. I don't want to cover the news anymore. You can look up what's going on there. Plenty of places to look for that. And so that's where we are. Now, where are we likely to go today? So today, let's roll it up. You know what? I still haven't done those measured move levels. Still need to do that. This is a classic pop up into new all-time highs, looking for an open auction, looking for it to test down slightly, looking for an impulse up, as we've seen, consolidation, and then continued trading. I'm looking for it to also be resisted on the way up. This is when we push into new all-time high territory on the open, we see a lot of selling on the way up, and that makes sense as folks take profits. They're filling the offer, and the market kind of moves in a contested way. So I'm not looking for it to open and run for an open drive into this. The news is somewhat baked in. I'm looking for an auction, a two-way auction, but with a skew upwards. It is a Monday, and there's still news being fed. Okay, so the ideal situation is, of course, it pulls back and it gives us so right now it's trading right against the all-time high right here at 59 and a quarter, 59 even. The all-time high is 58.50, I believe. Yeah, 58.50, and that takes us down to the gap zone. The gap zone high is 25.50.75, which is pretty much the overnight low. The gap mid is around the overnight low. The ideal scenario, of course, if I had to place my wish, is for it to consolidate down, to be responsive. In other words, sell towards the most recent auction, to respond back down into the gap mid, into this gap zone mid, consolidate higher low, and then gives us an opportunity to get long and look to exit ahead of the high made for the morning, the opening swing high, and off to the races we go. That's the ideal situation, to lean against the gap mid long. But again, I don't anticipate too much range without news. So my ear is very, very, very focused on what comes out of my news squawk, and I'm looking for how it's feeding into the market. I don't trade news on its own merit, and I don't suggest that you do, but I pay attention to the news because it tells me what sort of impact I might expect. Do I trade on that expectation? I do not. What I do trade on is what the market does next. Just knowing that something has come out is important. Sometimes, most times actually, I see it happening in the market before. But the Mike Flynn news yesterday, the market had only moved 6 points before I heard why it moved, and it gave 39 points after that to do something with it. Now that's devastating news to the current administration, and so not that I would wish that on them, but and so there's a lot of room to trade. Remember, we're not here to deal with politics and deal with our political views. We're agnostic to what happens geopolitically. We're only interested in what price discovery will occur as a result of that news. Okay, so my feelings about Trump versus Clinton versus Obama versus Trudeau versus, it doesn't matter. What matters is how does the market respond to this news and what is the price discovery that's coming? In other words, what is the market likely to price in following that news? That's what we're here for. So you got to set your leanings aside. I'm not gonna assume everything's fake news and just buy it as it's dropping. That's just suicidal in my opinion, unless you have a huge account. So just remember, you're here to trade. You're not here to enforce your own opinions on the market. Okay, it's very, very important, and I know a lot of people have a hard time with that distinction. Um, I believe the market's going to go up, so I'm just going to buy. Well, why are you buying in a falling market? It just doesn't make sense, unless, of course, that is your plan. Anyway, secondary hypothesis is for it to push higher, fail. It just doesn't have any fuel, and then for it to consolidate for the rest of the session in this range as it anticipates further news. So if that happens, I'm looking for about 8 points of range, and I'm looking for this gap to remain open between today and Friday, and that's just a situation that we've seen many times before, and we are essentially fueling for the next big move out of this area, and that would be scenario two. Scenario three is classic open test drive lower. It just runs out of buyers, and all you have is sellers that feed longs that feed into selling, and you get the impulse down and then consolidate, and then it pushes into the range, and then it starts to consolidate its way into the range, and we've seen this several times, and then we end up with a pop on the close. That's the third scenario of the day. If I see an impulse down early on into the range, I would not overstay the shorts in this scenario. Your key target is Friday's point of control, but I would not overstay these. These have not paid off. Uh, these have not paid off very well to hold on to and look to ride all the way down. Okay, so I'll leave you with those thoughts. Good luck today, and have some words of wisdom for you tomorrow. And I'll catch you then. Take care.